Let's get to it with Mohamed to talk about the markets. Big week of economic data coming up and the feeling coming out of Fed Chair Jay Powell's Jackson Hole speech, Mohamed. And first of all, welcome and good to see you. What's your main takeaway? A year after Powell was brief and relatively blunt and harsh and trying to persuade the markets that a lot more tightening was to come, he seemed not really to want to make explicit news. He kind of recapitulated the current situation. Inflation's down a lot, but not enough. We may hike more, but we're going to be data dependent. Not talking about cuts just yet. So where does that leave us?
So first, what Powell did, and it actually came as good news to the markets, is he didn't say anything new. He maintained maximum policy optionality. And the market liked that because there was some concern that he may go and start talking about this R-star, longer-term issues, which actually are uncertain for markets. So the good news...
R-star, which is this theoretical neutral rate of interest, right?
Correct. What's really interesting is the two things he did say about the longer term. One is, and we have played it on the air, inflation, the target is and will remain 2%, very controversial. And second, that we are operating under the stars, but it's a cloudy sky. Right? These two things are really meaningful because away from him, and unfortunately there's enough coverage, there was a lot of discussion about how the global economy is changing, how supply-side issues are becoming more important, and what does that mean for monetary policy. So the good news for the markets is they heard what they want to hear, which is nothing new. But the bigger news is that there are real puzzling, outstanding issues out there.
Yeah, I mean, I guess we can really describe those in several ways, right? We have a full employment economy in the U.S. where inflation has been coming down, not to target, but it's been coming down. It seems late in the cycle based on a lot of metrics, and yet we're kind of reaccelerating in terms of GDP growth right now. Longer-term Treasury yields going up, but it's not because inflation expectations are spiking. So I guess it would make sense for a central banker to say, I want to preserve as much flexibility as possible.
Yeah, totally. And look at the marketplace. Look what we're pricing. Pause, hike, pause, cut. I've never seen that sequence before. It shows you that we are uncertain. We think inflation will remain low. We think the Fed will have a green light to cut. But that sequence is a really interesting one.
The structural changes that are most crucial, do you think, going on in the economy right now are what? I mean, there's a lot of talk that, okay, it's going to be a higher for longer world in terms of rates, but what ultimately is crucial?
Mike, it's all about the supply side. We've come from a world when it was all about the demand side. There was insufficient demand in the system. So what do? QE, zero rates, fiscal expansion. We're now in a world where it's about the supply side, and unfortunately, not enough policy tools are being used. So look at everything we talk about. The rewiring of supply chains, the transition in the economy, the labor market, like you just mentioned, labor becoming more forceful. We have the possibility of more strikes. You saw what happened at American Airlines. You saw what happened at UPS. So it really is all about the supply side, and we've got to get our head around there.
One of the lines I found interesting in the speech was he said, look, the only way to get to 2% is to either have below-trend economic growth or to have a softer labor market, probably both. Yet it feels like the stock market in the first half of this year believed that we were going to have this sort of immaculate disinflation and or that the economy was going to strengthen. In fact, it does seem like we're not experiencing subpar economic growth right now. The Atlanta Fed talking about a 5% plus third quarter. Do you think the market's not getting that message about below-trend economic growth?
So I think the market has changed its mind so many times. I mean, if I remember correctly, we went from soft landing to hard landing to no landing to crash landing in March to soft landing, and some people are talking again about no landing. So we've been all over the place, and that's because it is such an uncertain time. I think, Robert, the key issue is 2% the right target? That is the key issue.
He's got to say it is.
He's got to say it is, and there was a lovely line by one of the speakers, Professor Eichengreen, which is that we're going to tiptoe to a higher inflation target. We're not going to announce it. We're just going to end up living with inflation that's above 2%. is going to prove to be stable, and at some point you're going to be able to make that transition. If that happens, that's great for the markets.
Do you think in an election year he can get away with cutting rates if it's 2.8, 2.9, as long as it has a 2 handle?
I think it's going to be hard if he continues to say 2% is and remains our inflation target. If he goes a little bit quiet on that, I think that...
Do you ultimately think they will wait to 2, or do you think it's...
Well, I mean, in the press conference in July,
plus?
Powell said we'll probably be cutting before we get to 2.
Right.
Right. I mean, just because of the math of how what's restrictive, what's not.
But what we're looking at right now is a possibility that headline inflation will head back up.
Yeah.
And core inflation may not come down quickly enough. And it all comes down to services and wages. That's where the battle is being fought right now.
And housing. Also, I mean, housing is not or is part of core.
So, you know, there's a real issue as to whether we've broken the housing market. When you go
Prices are going up. Rents are going up.
So when you go from record low mortgage rates to levels that we haven't seen for almost 20 years, you destroy both the demand and supply.
Right.
Right? And that's the irony.
Yeah.
Is that supply has come down and demand has come down as well. That is the way you destroy a housing market. And we've got to be really careful because the housing market is central to the economy.